Nvidia went from a startup to the third most valuable public company in the world.
It's a company that has transformed from a niche chip supplier to a dominant force in the tech industry.
It does quadrillions of calculations a second. It's just insane numbers. We need artificial intelligence to help us explore the universe in places that we could have never done ourselves.
A company that rode the rise of video gaming to untold riches.
This year, Nvidia's journey mirrors the early days of the internet boom.
What if the AI boom suddenly turns into a bust, threatening Nvidia's rise? Once standing shoulder to shoulder with Cisco, Nvidia is now leading the charge in the AI revolution, shaping our technological future. It's crucial to remain vigilant. If powerhouse companies like Adobe, Salesforce, SAP, and ServiceNow begin to falter, it could spell disaster for the entire AI industry. Could these warning signs derail Nvidia's path to reaching a $200 stock price soon? Let's delve into what this rapidly approaching crisis could mean for Nvidia's ambitious goals. The hidden potential of Nvidia's AI revolution. Think about companies like Adobe, Salesforce, SAP, and ServiceNow. Their performance, along with their customer bases, is crucial. If these companies start to see a drop in earnings or growth, it could be a warning sign for the AI sector that Nvidia is helping to build. Keeping an eye on these trends helps us understand if the growth we're seeing is solid or if we're heading towards a potential overvaluation like we saw in the past. In today's fast-changing tech world, it looks like public clouds are taking over, with big companies fighting for dominance. But there's more to the story. The move toward enterprise solutions is opening up new possibilities. Companies like VMware, now part of Broadcom, along with Red Hat, IBM's software divisions, and HP's tech products have a lot to gain from the growing infrastructure. This isn't just a short-term boost, but something that could keep benefiting these companies for years. Think of this strategy as a gift that keeps on giving. If Nvidia and its partners can pull off their plans, businesses could see huge benefits. This could happen by using services from well-known enterprise SaaS providers or by creating their own new solutions. This chance points to a possible golden age of growth and innovation that could last 5 to 10 years, maybe avoiding the usual tech industry slumps. But that's not all. Looking at Nvidia's path through Hans Mosesmann's analysis, the future looks even brighter. He predicts Nvidia's stock could hit $200 per share, pushing its value to nearly $5 trillion. Mosesmann believes this growth will come from something often overlooked: Nvidia's software, which works perfectly with its hardware. He sees a big increase in software demand that could change the financial landscape of the industry over the next decade. Nvidia's mix of strong software and advanced hardware might set it apart in a market that's all about complete tech solutions. Nvidia's strength isn't just in its high-tech hardware, it's also in the software that makes everything work even better. People really want this technology. Kathy Wood from ARK Invest thinks that by 2030, the market for AI software alone could be worth an amazing $13 trillion. On top of that, Nvidia is about to release its new Blackwell GPUs later this year, which will make it even stronger in the AI chip market. Nvidia's stock is currently priced at 51 times its expected future earnings. This might seem high, but it's still a good investment because the stock has gone up by more than 20,000% in the past 10 years. This incredible growth makes Nvidia's stock an appealing choice. Plus, the recent drop in stock prices could be a great chance to buy more shares. But the most exciting part is still to come. With Nvidia's annual shareholder meeting coming up, investors should pay attention. This meeting might reveal the company's future plans and confirm its strong position in the market. As we get closer to this event, the reasons to invest in Nvidia seem even stronger. But that's not all. Patrick, what do you think are the biggest challenges Nvidia faces in this tough market? Nvidia's pricing for their chips is a key reason for their success. At first, their data center chips cost between $5,000 and $10,000 each. But now, these prices have jumped to $30,000 to $40,000 per chip. This big increase has greatly boosted Nvidia's profits, often more than doubling them, and helped them stay ahead in the high-performance computing market. But this isn't the only reason Nvidia stands out. In the race against big players like AMD and Intel, Nvidia shines not just because of their hardware, but also due to their smart software integrations. These competitors offer strong chips for both training and inference tasks, often matching Nvidia. Yet Nvidia has an edge with their exclusive software, like CUDA and Nvidia Insight, which are vital tools for developers in AI and data science. The real genius of Nvidia's strategy is in creating a lock-in effect with their software. Even if other companies make similar or even better hardware, customers stick with Nvidia because of the unique capabilities and ecosystem their software provides. This not only ensures a loyal customer base, but also makes it tough for competitors to break into the AI and machine learning market. But this wasn't the end of Nvidia's challenges. They also face competition from tech giants like AWS, Azure, and Google, who develop their own in-house silicon solutions. These companies design their hardware to work perfectly with their vast cloud services, making them very attractive to big business customers. This adds another layer of competition where Nvidia must keep innovating in both hardware and software to stay ahead. As AI technology grows, the need for more powerful and efficient chips goes up. Nvidia's ability to charge high prices for their top chips shows their unmatched performance and how crucial they are in running advanced AI applications. The ongoing improvements in Nvidia's software will likely be key to their continued success in this tough market. The last meeting ended with a buzz. What will Nvidia reveal next? Nvidia's AI domination, the future unveiled. Some experts are telling investors to be on the lookout for competitors like AMD or Intel trying to catch up and take some of Nvidia's market share. But Nvidia is ready to defend its top spot with ongoing tech advancements. Having better products is key, and competitors would have to match or beat Nvidia's products to make any real progress. For example, AMD spent $1.5 billion on research and development last quarter, while Nvidia spent $2.7 billion, showing their commitment to staying ahead. On the other hand, Intel, even though they spent a huge $4.4 billion on research and development, is having financial problems with negative free cash flow. This could make it hard for Intel to keep spending so much money in the future. With Nvidia's strong financial position, they can not only protect their current market lead, but also possibly increase their market share. This upcoming shareholder meeting is a key moment for Nvidia. It will show their strategic priorities and how ready they are to keep leading in the fast-changing tech world. Investors and industry watchers are eager to see how Nvidia will handle challenges and use their financial strength and innovation to stay ahead of competitors in AI technology. It's clear that many things help the global AI market grow. Based on data from Statista, the AI industry is expected to grow at a rate of about 28.5% each year until 2030. While this growth isn't as fast as what we've seen recently, it's still impressive. Keeping up this pace would be quite an achievement. But remember, this prediction is for the whole AI market, not just the semiconductor sector where Nvidia is focused. So the actual growth in semiconductors might be a bit slower. Looking closer, we need to understand that these numbers show general trends that might not match perfectly with specific parts of the industry. Even though Nvidia's main area, semiconductors, might grow slower than the overall AI market, there's still a lot of potential for big changes thanks to AI technologies. This sets the stage for us to look more closely at Nvidia's strategies and potential in the tech world. But this isn't the only thing to keep in mind. Thanks for staying with this analysis so far. Creating content like this takes a lot of effort and time. So if you find it helpful, please like this video and subscribe to the channel for more updates. As we look at how Nvidia is growing, it's clear that the future is full of potential for this tech giant. Today, we talked about something called Compute Unified Device Architecture, or CUDA for short. I momentarily forgot what the A stood for. It means architecture. This technology is key to Nvidia's progress. A big part of our discussion is Nvidia's market value, which is about $3 trillion right now. Just think, it could go up to $4 trillion. This isn't just a dream, it's based on real trends and how well other companies in the industry are doing. If they do well, Nvidia can keep growing. But here's the catch. For Nvidia to thrive, these other companies need to succeed too. If they don't, Nvidia's growth might hit a ceiling. Patrick, you brought up an interesting point about the next 10 years and Nvidia's role in that time. It's not just about numbers, it's about how AI will become a part of our everyday lives. Imagine talking about CUDA at the dinner table because Nvidia is at the heart of what analysts at Goldman Sachs call the biggest AI investment opportunity today. This isn't just about money or market sizes, it's about the bigger picture and how technology will change everything. The excitement is real as we watch these changes unfold. Nvidia's journey is about more than just growing. It's about driving big changes in tech, promising a future full of new innovations. But there's more. The real impact is how Nvidia's growth will influence everything around us, making technology a bigger part of our daily lives. So as we look forward, we can see a world where Nvidia isn't just growing, but helping to reshape the entire tech landscape. Nvidia is making some exciting changes that are transforming the tech world. The company, which was mainly known for its semiconductors, is now expanding into new areas. Nvidia is building a comprehensive AI ecosystem by partnering with big tech companies like Dell. Together, they are creating powerful AI computing solutions that could change many industries. At the center of this growth is Nvidia's focus on innovation, especially in areas like self-driving cars and humanoid robots. These projects are not just about adding new products, but are also about setting new standards and improving technology in various fields. Patrick Moorhead, the CEO and chief analyst at More Insights and Strategy, highlighted Nvidia's active role in shaping the future of technology. As the discussion ended, everyone wondered, what's Nvidia's next big move? The surprising tech titan, Nvidia's rise in AI. But this isn't the most surprising part. Nvidia's new projects are making it a key player in the tech industry. The company is not only following current trends, but also creating them, showing that the future of technology holds exciting and limitless possibilities. And that's not all. As Nvidia keeps developing new technologies, it's clear they are leading the way and promising even more groundbreaking changes ahead. The fast-changing world of artificial intelligence, Nvidia aims to become the main hub for other companies. This isn't just about participating, it's about leading and pushing AI technology forward. Nvidia is involved in many areas like health, cars, and drug research, making it a key player in shaping the future. Right now, Nvidia's stocks look like a great opportunity for long-term investors, especially with the recent price dip. This isn't just a small change, it's a chance to invest before Nvidia's value rises again, driven by its AI innovations. But is buying Nvidia stock a good idea at the current price? We want to hear your thoughts. What do you think about Nvidia's market potential? Share your opinions in the comments, and let's discuss the future of AI together. But here's the interesting part. Nvidia is not just focused on technology, it's also making significant moves in industries like healthcare and automotive. These steps are setting it apart from other tech companies and showing its potential to influence various sectors. However, the real question is, how will these advancements impact Nvidia's stock in the long run? It's not just about today's prices, but the future growth. Your insights matter, so let's dive into this discussion. What do you see as Nvidia's strengths and challenges? Join the conversation below, and let's explore together. And let's not forget, Nvidia's involvement in drug research is another game changer. This area has vast potential, and Nvidia's technology could lead to significant breakthroughs. Imagine the possibilities as AI continues to evolve and impact more fields. But this isn't the end of the story. How do you think Nvidia's role in drug research will shape its future? Will it make a big difference in its stock value? Your opinions are crucial, so share your thoughts with us. Let's keep the conversation going and discover the future of AI and Nvidia. However, Moorhead warned that there could be potential problems ahead. We need to be very careful and watch for early signs of a downturn. For the next 6 to 9 months, I don't expect major changes, but it's important to see if companies are making profits from AI, he advised. He pointed out that companies like Adobe, Salesforce, and SAP need to show they are earning more from their AI features. If these companies and their customers aren't willing to pay more for AI, we might see a sudden stop in growth, just like the internet bubble crash, he warned. But this wasn't the worst part. Moorhead then asked an important question about Nvidia's future. What does Nvidia need to prove now to confirm the story they've been telling the market, he wondered. He emphasized that Nvidia's next growth stages would focus mainly on enterprise solutions, showing the strong impact of artificial intelligence on the tech industry. This shift, he suggested, is crucial not just for Nvidia, but for all tech companies moving into AI. Over the past year, we've seen a big change in how businesses handle their data. About 80% of this data is still kept locally, or on what's called the enterprise edge. This change has pushed big companies like HP, Dell Technologies, Pure Storage, and Lenovo to grow their infrastructure a lot. A speaker at a recent event talked about these changes, sharing insights from both HP and Pure Storage events. Nvidia has become a major player in this shift, Their advanced chips are at the heart of the AI revolution, giving the power needed for these complex tasks. This technological edge has boosted Nvidia's reputation and their stock value. In fact, Nvidia's stock has shot up by over 200% this year. This growth was so impressive that the company split its stock into 10 separate shares, grabbing the attention of Wall Street analysts. But that's not the end of the story. One analyst has raised his price target for Nvidia to $200 for next year. This suggests the stock could go up by 58% from its current price, showing strong confidence in Nvidia's continued growth. Such positive predictions are important as Nvidia heads towards its annual shareholder meeting on June 26th. This meeting is highly anticipated because it will likely discuss the company's future plans and financial health, making both current and potential investors pay close attention. With new plans in motion, what's next for Nvidia? Nvidia's unseen software powerhouse. Nvidia and its partners are at the center of tech's future, stepping into a world full of new opportunities. Unlike unpredictable public cloud platforms, Nvidia's approach seems like a constant gift that keeps giving. If Nvidia and its allies succeed, businesses might start creating or using enterprise SaaS solutions with big benefits, possibly leading to long-term growth. This could protect the tech industry from a big downturn, like the one seen decades ago. Analysts point out Nvidia's special position in the market, highlighting that its edge is not just about hardware. Their popular software is crucial for top performance. If Nvidia reaches the ambitious $200 price target set by Hans Mosesmann, its market value could approach a staggering $5 trillion. Mosesmann believes this potential success is due to an often overlooked part of Nvidia's operations, its software, which perfectly complements its strong hardware. But that's not the whole story. The demand for this software is expected to skyrocket over the next decade, significantly affecting the company's sales. Kathy Wood from ARK Invest predicts that the total market for AI software could hit around $13 trillion by 2030. Looking ahead, Nvidia is preparing to launch its next-generation Blackwell GPUs, which are expected to further solidify its leadership in the AI chip market. Considering Nvidia's incredible growth, over 20,000% in the past decade, the future for its stock looks very promising, showing strong confidence in its path as a leader in tech. Trading at 51 times future earnings might seem expensive to some, but this doesn't mean Nvidia is a bad investment. It actually suggests there's still potential. Right now, the drop in its stock price could be a good chance to buy more shares. With Nvidia's annual meeting coming up, it's important to know what this means for investors and why the stock is still a good buy before the meeting. When I talked to Patrick, he pointed out the tough competition, which led to a deeper conversation about the challenges Nvidia faces in keeping its chip prices high. He wanted a detailed comparison of Nvidia's chip costs compared to its competitors. This shows a big difference in pricing strategies. Nvidia's chips, known for their high performance, are much more expensive than those from competitors like AMD and Intel. This price gap is partly because Nvidia enjoys impressive profit margins, often over 1,000%. This high profitability shows the company's ability to innovate and lead the market despite strong competition. But this isn't the biggest challenge. The competition isn't just from traditional chip makers. Tech giants like Google and Microsoft, with their Azure platform, are also developing their own chips. This adds another layer of competition as these companies create chips tailored to their needs and integrate them into their huge tech systems. Right now, there's a clear race between Nvidia and AMD, each trying to secure a better position through unique software integrations. AMD and other chip makers pose a significant challenge to Nvidia's dominance. The strategic decisions Nvidia makes now in terms of pricing, technology development, and market positioning will be crucial in determining its ability to stay ahead in this competitive industry. At the front of the tech world, Nvidia continues to lead the competition with its advanced chips for both training and inference tasks. While AMD has come up with competitive products, Nvidia stays ahead mainly because of its special software called CUDA, or Nvidia NMs. This technology makes users prefer Nvidia, giving it a big advantage. Nvidia will have its annual shareholder meeting, an important event where big decisions and board approvals are discussed. Usually, these meetings aren't as exciting as quarterly earnings reports, but this one could be very significant. It might reveal future plans and changes in the AI market. Nvidia's strong cash flow, which supports its financial health, continues to boost its stock as the meeting nears. But that's not the only thing to watch. competing in technology is very expensive. Nvidia's competitors, like AMD, are spending a lot of money on research and development to keep up. Last quarter, AMD spent $1.5 billion on these efforts. On the other hand, Nvidia invested a huge $2.7 billion to advance its technologies. This is almost double AMD's spending and shows Nvidia's commitment to staying on top. This large investment is seen in the quality of Nvidia's products and its strong position in the market. Many industry experts point to this heavy spending as a key reason for Nvidia's success, suggesting that other companies will need to spend much more to compete with Nvidia. As we look at the competitive world of technology, it's important to see how Intel is spending a lot of money on its operations. In the latest quarter, they spent $4.4 billion. Despite this big spending, Intel is facing financial problems, with consistent losses and negative free cash flow. This situation raises concerns about whether Intel can keep spending so much without seeing positive results. But this isn't the worst part. Nvidia, on the other hand, seems to be in a much better place. With plenty of financial resources, Nvidia is well equipped to handle competition. This strong financial position allows Nvidia to potentially increase its already significant market share. While many factors are in play, predictions suggest that the global AI market, a key area for Nvidia, will grow at about 28.5% per year through 2030. Even though this growth rate is a bit slower than Nvidia's recent rapid expansion, it is still very high and promises continued success for companies invested in AI technologies. After recent news, the big question is, how will Nvidia handle the next challenges? Navigating Nvidia's strategic roadmap. It's important to remember that these numbers reflect the overall AI market and not just the semiconductor industry, where Nvidia mainly operates. So while the general market outlook is positive, the specific growth for the semiconductor sector might be different. This means Nvidia needs to carefully align its strategies not just with general market trends, but also with the specific realities of the semiconductor industry. This careful planning will be essential for Nvidia as it moves forward in the fast-changing tech world. But this isn't the end of the story. Intel and Nvidia both face unique challenges and opportunities in this competitive landscape. Understanding these dynamics is key to predicting their future success. Talking about the current situation, it's important to understand how big this new technology is. Goldman Sachs has called it one of the most popular AI trends, meaning it's getting a lot of attention in different industries. Patrick made an interesting prediction. Soon, this will be something everyone talks about at dinner. We're talking about compute-unified devices. Even if we're not exactly sure what that means, it has something to do with how they're used in different areas. Paul Meeks, the Chief Investment Officer of Harvest Portfolio Management, added another point. Even though the last item on our list might not seem like a big deal, the stock market is showing a different picture. Recently, there's been a lot of talk about data centers and AI products reaching their peak sales. This change could be a big moment in the tech world, possibly changing how we use and rely on AI in our everyday lives and the global economy. But here's the kicker. This isn't just about new technology. It's also about how we understand and use these changes in our daily lives. The near future, especially over the next few years, there won't be much to argue about regarding certain matters. Everyone's attention is on this Wednesday, the day for the annual shareholders meeting. At 9 a.m. Pacific time, CEO Jensen Huang is expected to confidently take the stage. Although the timing wasn't mentioned in the event's press release, it follows the usual industry schedule. During this meeting, it's expected that Jensen will highlight the amazing progress in artificial intelligence, a topic he's very passionate about. The main goal is to boost investor confidence by showing that the journey of innovation and growth is far from over. Based on Jensen's remarks this Wednesday morning, it's likely that we'll see a significant positive change in the company's stock value. But here's where it gets interesting. Will Nvidia's growth be affected by investors cashing in their profits too soon? Our view of Nvidia's growth is a bit unclear because of these quick profits and the fact that Nvidia is still relatively new in the industry and people are just starting to fully embrace it. You're right that Nvidia will probably keep outperforming its competition. They've been leading the market impressively for almost a year and a half, especially since the launch of ChatGPT on November 22nd. This trend is expected to continue, but this isn't the whole story. What's really intriguing is that Nvidia doesn't share its earnings forecasts ahead of time. However, they are expected to keep exceeding financial expectations and to drive home the message, a true one, that the boom in AI chips is here to stay. The potential for growth in application is huge, likely surpassing most current predictions. The discussion was about how big tech companies are spending a lot of money on developing AI. They are putting billions into AI infrastructure, which sometimes affects their financial predictions. For example, a past problem with Supermicro showed an important part of Nvidia's growth story. Paul talked about the current stock market trends and if it's a good time to buy stocks. He believes these companies are financially strong and thinks their stock prices might go up soon. He's thinking about investing more, especially since the stock price is near the 20-day moving average, which can hint at future price changes. He mentioned that it's not a good time to sell or bet against the stock, but to wait and see if it drops to the 50-day moving average for a better buying opportunity. Do you think now is the right time to invest in tech stocks, or should we be cautious of a potential bubble? Let us know in the comments, like, and subscribe for more insights.